Woohoo! Hello, everybody. Good to see everybody here. Sorry, I'm a little bit late again due to some distractions out there, but I appreciate you all for coming. And I have audio, but not a studio. But that's okay. We're going to make this happen anyhow. So, big news. This one is what happened this week. Things you have missed, and so much happened. Some stuff I will not talk about because it triggers people, but wow. Crazy changes are going on all over the world. But we're going to focus on crypto, Bitcoin, secret stackers, real world assets, more adoption. We'll also look at some bot news, some AI news, some semiconductor news as well. And let's jump in. And thank you all for coming. Thank you as well to Sean Donnelly, to American Beijinger, and the whole crew out there. Everybody who's here, I really appreciate you all. And this is not financial advice, just a guy on the internet. And also thank you to everybody on Patreon. Let's talk about the black hole, Bitcoin black hole. I haven't analyzed the numbers lately for a couple of days, but it was an uncertain week. A lot of people don't know where things are going. Certain industries are getting completely crushed. But still, despite all this uncertainty, $205 million came into Bitcoin. And in fact, Bitcoin just broke through 97,000. As I speak, people were hoping for 70,000. Wouldn't that be nice? But no, I think it's unlikely. But anyway, let everybody, what makes a market is the bull and the bear perspective. So we should be grateful for the bears. And they do have their day in the sun 20% of the time. So that is where we are now. In terms of the money flow, you can see the trend is up. We had the biggest stacking period ever since day 210. We're at day 270 now of ETFs. So remember, one full year is about 252 trading days. But we are below trend, below that pink smiley face right now. But again, despite a choppy week and a bumpy year, 55,000 Bitcoin were added to the ETF so far this year. And that's just in 30 days or so. 2,200 Bitcoin were purchased this week. So it's not bad at all. But the real story is there's other people buying Bitcoin. First chart I will look at today, that is an on-chain chart. By the way, I have Checkmate on the channel for Okta. The guru who used to be at Glassnode, now he has his own on-chain analysis company. But he's going to be on with me on Tuesday. I'm very excited for that one. But first, Bitcoin on exchanges is tanking fast. I want to point out here, everybody, is the rate of change. We've gone from 3.5 million Bitcoin on exchanges in 2021 to 2.4 million today. And yes, it's still a lot, 2.4 million. But remember, much of those Bitcoin are not for sale. People leave them on exchanges because they don't trust themselves with self-custody. So bear that in mind. But look how this little purple line has tanked. Okay? Could a supply crunch happen? I've been talking about it for years. Did I believe it was going to happen in 2025? No. But looking at this and anticipating at least another 40 billion coming in from ETFs and MicroStrategy stacking like hell and other players, yeah, I think we could have a supply crunch. Now, another very interesting news, which I know nobody probably cares about, but Mr. 100 just bought 100 Bitcoin again, 109 to be precise, at 96,580. So they are back, which is interesting. They've been kind of quiet for a while, and now they back. But in more interesting news, CZ, and this is from Vivek, Binance founder CZ says United Arab Emirates already has Bitcoin in reserves. That is Dubai. BD McGee, thank you so much. You're so kind, and everybody here, and Irrational and the whole gang. But again, Dubai, Emirates already has Bitcoin reserves. Is Dubai this player here, Mr. 100? We'll find out. CZ seems to know. He also says Hong Kong is ready to buy Bitcoin. Huh? Hong Kong? Well, guess what? There are a couple of other stackers out there. First of all, again, from Vivek, Texas is planning to buy $500 million of Bitcoin each year. This is just one state in the United States. I now have counted 25 states have already put in place some type of law around Bitcoin strategic reserves. That is the tipping point. That is half. The rest have to follow. You can't be left out. In fact, one just joined the gang. A place called Missouri is next in the box. And the Missouri rep, Ben Keithley, proposes bill to add Bitcoin to the state's financial strategy. If passed, the treasurer could receive, invest, and hold Bitcoin. It's like they're just copying and pasting what all the other states do. But I don't care. We like when other players come in. And that's good news. And Hong Kong, speaking of Hong Kong CZ, see the way it's all connected here? He said, it's inevitable for Hong Kong to buy Bitcoin. Well, guess what? They just started steps in that direction. Hong Kong now officially accepts Bitcoin and crypto as proof of assets to apply for residency. If you want to go live in Hong Kong, and I've been there many times, it used to be a cool city in the 90s, haven't been there in quite some time, but if you want to live there and get residency, you can just say, hey, look at my Bitcoin bags. Am I welcome now? I don't think you'd really want to share your Bitcoin bags with the Hong Kong government, which is related to China. But anyway, who knows? But I thought that was very interesting. So ZZ will probably be proven right again that Hong Kong is going to bag Bitcoin, and Dubai already is. Now, the other big story that you probably missed is from Matt Hougan. And he is kind of an OG in the internet space. And he had this long, I think it was like 18 or 19 thread tweet thing. And he says he believes the 4-year cycle may be over. He referred to the ETFs. They brought in $42 billion last year. Huge influx of institutional money into Bitcoin. And this has kickstarted this whole dynamic of what's going on now with nation states, with the United States, with the United Federal Government, maybe stacking some Bitcoin and so much more. Also, the change in Washington's approach to crypto, highlighted by the crypto executive order and people like David Sachs, the crypto czar, suggests a big shift to this new asset class. Now, the point is, Bitcoin is very scarce, and game theory is just beginning. If all these players come in, there simply is not enough to go around. 450 being mined every single day. Long-term holders holding. Very little on exchanges. The OTC desks are being depleted. Down another 4,000 Bitcoin over the last few days. What's going to happen next? And this is why Michael Saylor knows. He understands game theory. He knows no matter what, he just needs to stack as much as he can before the rest all pile in. Now, the point that Hougan was saying, though, he expects there to be maybe no more bear market anymore. And this is also similar to what happened with gold when the gold ETF was launched. By the way, the Bitcoin ETF is larger than the gold ETF. The gold ETF has been around for 20 years. The Bitcoin ETF was bigger than the gold ETF after just 9 months. Crazy statistics. The point here, though, is what happens in 2025. You can see it's normally a very, very good year, and then 2026 is the bear market. Will we get one? We shall see. Again, with all the stuff we're seeing right now, I'm not sure. Things could be crazy. Yes, I am live. Yes, it is 6:17 p.m. here on the west coast of the United States. Now, in other crazy news too, if things couldn't get better, there has been a huge push from TradFi to start building real-world asset capabilities on-chain, RWAs. BlackRock and JP Morgan are pushing hard for tokenization. And now we have a very receptive SEC in the United States that will rubber stamp pretty much everything, including a solid ETF that is expected imminently as well. But here, analysts predict TVL could hit $50 billion in 2025 for real-world assets. This is basically the tokenization of everything. Stock markets will become tokenized. You won't be buying shares anymore. You'll be buying tokens of shares. And that can be very divisible as well over time. So it's going to be a fun space to watch. And in fact, Toly, excuse my typo, Toly says, S-A-I-S, says real-world assets will hit $1 trillion. And BlackRock now is backed by Securitize, which is based on Solana. So We'll see. And to do this type of stuff, it's very, very important to have a chain that can actually scale and handle up to millions of transactions per second with near instant finality. Nothing else will cut it. 15 TPS will not do it for this whole new world. Tokenization of exchanges, etc. Now, gold is on fire. So even as rates have rebounded, there is a thing called the reverse repo. I'll get into that in another chart in a second. And the US dollar is the strongest currency on the planet, and gold is soaring. But the reason we care about gold soaring is typically it soars before a crisis, and that makes people nervous. Now, the crisis, though, this time is a slow, gradual one that the world is aware of, and that is debt, deficits, debt, debasement, money printing, debt. People don't want fiats anymore. The question is, when will they learn that Bitcoin is better gold? And if this happens, wow, things will kick off in earnest, because the amount of stacking of gold is insane, and gold continues to reach new all-time highs. So we'll see what happens. We'll see if there is a crisis or a gradual crisis. But one thing is for certain is the following, that ties back to why people see debt is a massive problem. This is from the Kobesi letter. The reverse repo chart, RRP, is out of cash. Okay, the balances have been depleted, and this shows you how the Fed is managing liquidity. Basically, this could be very, very positive for Bitcoin because they have no money. What do you do when you're the Fed and you have no money? You print it. Okay, yes. They are actually doing stealth printing just to keep their head above water, but they have to print more, and this will fuel Bitcoin. That's just how it works. It'll also fuel inflation down the line. That's how that works too. And that's not what the Fed wants, but they have to print, because over a quarter of all of the debt, 35 trillion, 36 trillion, is going to circle back into the markets and be financed at very high rates. And despite the Fed cutting rates by 100 basis points, mortgage rates, etc., have still gone up because nobody wants fiat. They're even buying this stuff called gold because of the debt spiral. The world now realizes fiat is trash, cash is trash, and this will have very big, broader implications as we go forward. Now, I'm going to switch gears out of crypto. I'm going to talk about the AI revolution, but the underpinning behind it. These are the semis, the top semiconductors on the planet. You can see, number one, 3.4 trillion market cap is NVIDIA. Number two, 1.1 trillion is Broadcom. And number three, right behind that, is TSMC, that make all the chips for all the players. They are what they call the fab. And then the other players you can see all over the world. But the question is this: what happens next? Can NVIDIA still maintain 90% market share? And the answer is no, not according to this report from Sanjay. But basically, they believe that by 2029, the NVIDIA market share will go from about 90% to about 50%. And their share will decline. There will also potentially be some regulatory challenges and new players. And what's really interesting to me about this chart is it looks at the new red line, which is the ASIC AI chip players. There are three that are mentioned in this study: Google, Amazon, and Tesla Dojo. Amazon Trainium, Google TPU, and those three companies are incredible. But people tell you Tesla's a car company, but now people know Tesla Dojo is coming, and it's designed to train better, faster than anything else. And that's what it uses for part of the FSD training too. So there'll be a lot more inference workloads. There'll be a lot more integration with cloud services through all these players. And, you know, who knows if Dojo as a service will be coming online too. A lot of people believe that's the case. The other green line at the bottom is the Chinese AI chip market share will break 20% by 2029, maybe even sooner, because the Chinese often move a lot faster. Shout out to Preston there as well. Anyway, in addition, Tesla not only makes Dojo ASIC chips for AI inference, etc., but Tesla bots are coming. This is a job posting in California for a Tesla bot production supervisor to be responsible for managing up to 50 production staff per person to ensure daily goals are met. So they're going to have managers managing 50 people that will be looking at bot production lines. This Tesla bot is going into production as we speak, and they hope to have maybe 10,000 by the end of the year. But Elon said realistically it might be 3,000 to 5,000. Either way, they are coming, bots are coming, and it's going to be huge. And then the final piece of news you probably missed this week is Amazon. Amazon's been a lot in the news lately. They basically decided to spend $100 billion on CapEx for AI. And guess what? They also have $100 billion in cash. I wonder, will they deplete that down to zero? That's crazy. Imagine having $100 billion in melting ice cubes. Tesla currently has about $36 billion, and Berkshire Hathaway has $350 billion, which is costing them $40 billion a year in shareholder value. Crazy when you do the math of debasement. Do not hold cash long term. We have to hold it, though, for dips sometimes. So with that, everybody, thank you all for coming. I will still be around tomorrow for the live Q&A, where I answer all the top questions you have from the week. Thank you to the mods in the chat. Don't forget, I'm only here to share my news with you, so you can all be a little bit smarter and prepare for what's coming in the world, because it is pretty scary. Check my Patreon post from today. Quite alarming. Anyway, love you too, American Beishinger and the whole team. Thank you, Sean Donnelly. And the fifth wave. Haven't seen you in a while. Beardy Day is here too. Hey, Beardy and B-Man, the whole team. Thank you all for coming. Have a good night, ladies and gentlemen. I'll see you tomorrow. Bye-bye.